What is going on, everyone? My name is Jeff, and I'm going to talk about two ETFs that I am currently buying. As a matter of fact, I bought quite a bit of these ETFs today. So right here behind me, guys, I've got the spider pulled up, SBY, and this tracks the S&P 500 index. In the past year, this is kind of the movement we've seen in the market. I'm just going to fast forward right here to December. We got this huge drop. I'm sure you remember it just like I do. Seems like all hope was lost. You know, the heartbeat was out of the investing community, and the shorts were loving it and the longs were hating it, right? That's another reason why I encourage everybody to try to play both sides a little bit. Guys, this has been the past week for the S&P 500. It's been loss after loss and red day after red day. We're giving some of those gains back. Now, we did kind of have an ugly jobs report this morning, and another thing too, earnings growth was not really as impressive as we all expected to be. Most of the companies that came into quarter four were running on lowered guidance. I guess it's safe to say that things are slowing a bit, but do I think we have a recession coming or a major stock market crash? No, not at all. Just got to keep taking advantage of these big dips. Now, I've always had a big interest. I've always invested heavily into index funds. That is the real way to start building a portfolio. Now, I've been investing for over 17 years, guys, and still to this day, I'm still investing money into index funds and ETFs. It is some of the most reliable and consistent gains that you're ever going to want. And as far as my index funds, guys, I probably will never sell those until I'm ready for retirement. I hope that someday I can give those index funds to my children, okay? I really have no plans or any desire to sell them. But the first ETF that I'm going to be buying in March is ticker symbol XITK, and that is the Spider Fact Check Innovative Technology ETF. I really like what this ETF is going to give you exposure to, okay? It's a lot of companies that I want a piece of, but I don't necessarily want to empty my bank account into them. And also, I'm very highly leveraged with ticker symbol SPY, DIA, you know, the triple Qs. So I'm very diversified, you know, in steady index funds, and I also own a lot of steady ETFs in pretty much all sectors. But I think this one has massive growth potential, and I really think it is just getting started. This is one you're probably going to want in your portfolio for the next 5 to 10 years. It seeks to obtain exposure to companies with subsectors and robust revenue growth that may provide leading edge products and services. So if you're interested in what sectors are going to be involved here, guys, it is mostly tech and electronic media subsectors, okay? And so right here, these pie charts can kind of explain to you just exactly what all they're invested in. It's IT infrastructure software, web-based data and media services, enterprise management software, finance software and services, semiconductor manufacturing, and consumer data and services. That is their top holdings. Now, I will make you aware of this. It does have a 0.45% expense ratio. So that lets us stop right there, guys. Obviously, the whole idea here is to buy these ETFs and go long with them, okay? Just buy and continue to hold. The fund dividend yield is 0.1%. and the index dividend yield is 0.28%, because you do get an annual and a semi-annual distribution fee paid to your account. This is the fund's top holdings. Now, it does have a very small weighted holding of each one of these stocks, okay? The most one stock is weighted in this portfolio is right up here, and it's about 2%. Every stock preceding that is less and less and less, but I kind of like that. I like the diversity factor. I like that there's not one particular stock that can do too much damage, but that all of these stocks together are kind of moving forward as an industry. I think it is a really good, reliable way to track this disruptive technology ETF. And so its biggest holding is Cloudera, followed by Roku. All of you guys know how crazy I am about Roku. You're going to get exposure to Snapchat. You're going to get exposure to Ellie Mae, IQIY, which, guys, I do plan to do a full stock analysis video on IQIY very soon. CyberArk Software, Rapid7, you know, a couple of these down here, guys. Shopify, that's another company I'm really excited about. Moving down the list a little bit, you're going to get exposure to Netflix, LendingTree, Everbridge, DocuSign, VMware, Teradata, Twilio, Lam Research, Western Digital, and Facebook, okay, and many, many more. Like I said, guys, this is mostly cloud computing companies, you know, media software companies, software, and innovative technology that we are going to move into the future with. So, all right, now let's just get to the good stuff. Here is the 5-year chart. The inception date on this ETF was January 15th of 2016. So this fund is just a little over 3 years old. Guys, probably one of the best dip buys you can possibly make in your portfolio. This fund opened at around $49 to $50 a share, and like I said, in less than 3 years has more than doubled itself, trading up well over $105 and $107 at one point in 2018, and then since then obviously taking this big dip right here in December, just like we talked about at the start of the video, has seen a nice recovery, and now once again we are seeing a dip. So I'm going to use this opportunity to build on this ETF. I am not selling out of any of my stocks to feed this. You know, I thought about that all day. I thought about selling some of my index funds, some of my real safe stuff, and no, guys, I don't want you doing that, okay? I want you holding your index funds and building those positions too, because then when you make a more aggressive investment like this, it is well leveraged by the stability of your index funds. So hold your index funds, you know, please don't sell them. And now the second ETF that I bought today, and I'm going to continue to buy through the month of March, guys, and that is USD. I've been interested into USD for quite a long while now. I've gotten some really, really good returns. As a matter of fact, in some of the more recent portfolios that I've built over the past couple of months, ticker symbol USD is probably my best performing position in just about any of those, okay? And guys, this is the ProShares Ultra Semiconductor Fund. That's another thing anybody that watches the channel knows. I love chip makers. You know, I love NVIDIA, AMD, Intel, Broadcom, Micron, and you're getting exposure to all of that in this fund. And of course, guys, this is some of the chip makers you're going to get the most exposure to: Intel, Broadcom, Texas Instruments, NVIDIA, Qualcomm, Micron, Analog Devices, Applied Materials, Lam Research, AMD is in here. Guys, it's pretty much every chip maker you can think of is housed under this ETF. That's why I love it so much. You don't really have to play the guessing game. I've been a big investor in NVIDIA for a long time, but it is nice to have something else leveraged in with NVIDIA, and also Micron too. Okay, Micron was on fire in 2017, and 2018 was a terrible year for Micron, and it is not starting off too well in 2019. But Micron is still a company that I want to own, and I do want to have a big position in. Now, USD does have a pretty big expense ratio. It's 0.95%, but it does pay out a 2.24% dividend yield, okay? In my mind, I take that 0.95% expense ratio and I subtract that from the dividend yield. Okay? I'm not getting in these ETFs for the dividend, guys. I have other stocks and ETFs that are very high dividend. I'm getting involved in these two ETFs strictly for the growth. Let's go check out the chart. Now, this is the max chart on USD. Guys, this fund actually launched in 2007 and opened around the 10 to 11, somewhere near the $15 range. Of course, it then got hit like everything else in the big recession of 2008, and this ETF was as low as $2 and $3 at one point. And so over the past 10 years, is traded up very, very nicely. Last year got all the way up to well over $50 a share. And now again, like I mentioned, pretty much the same deal with XITK. Took this big dip back in December, has traded up over the past 2 months, and now we are getting another dip again over this past week. So anytime we get a week where the S&P is down almost every single day, you know, I like to get in my M1 Finance portfolio and start buying these ETFs with as much cash as I can, okay? Always try to keep a nice amount of cash in your brokerage accounts so you can keep buying these positions down and we can keep buying time, you know, for the recovery. But anyways, guys, that's all I got for the video. Make sure to drop a like. I would really appreciate that. If there's some ETFs you guys are interested in, make sure to drop that down in the comment section and tell me what you think about this video, guys. As always, thank you for watching the video and have an awesome day.